The highly anticipated IPO of food delivery giant Swiggy launches tomorrow, November 6th, aiming to raise over 11,000 crore rupees. Now, this public issue will open for bidding until November 8th, with the allotment date set for November 11th. Eligible investors can expect their shares credited to the demat account on November 12th, while unsuccessful bidders will receive funds on the same day. As for the listing, Swiggy's shares are expected to list on the market on November the 13th. The price band for the IPO is set between 371 and 390 rupees per share, and the offering includes a fresh equity issue of approximately 11.54 crore equity shares valued at roughly 4,499 crore rupees, alongside an offer for sale of 17.5 crore shares worth around 6,828 crore rupees. If fully subscribed at the upper end of the price band, Swiggy could raise up to 11,327 crore rupees. Now, the big question is, should you subscribe to Swiggy's IPO, or would you rather better spend your money on the rival, Zomato? To delve into this, we have Mohit Gang, co-founder and CEO of Moneyfront, joining us. Mohit, first of all, thank you for giving us time here on News9. Now, the much-awaited IPO of Swiggy finally opens for subscription tomorrow. What's your verdict? Should one apply for this IPO or give it a pass?
Hi Suyash, pleasure speaking with you. Yeah, I think it's a highly awaited and anticipated IPO in the market. Fairly large IPO also. Look, I think you have to look at the larger picture out here. The food delivery market in India has grown from last year to this year from 112 billion to almost around 640 billion kind of a market size. And this is expected to touch almost 1400 to 1700 billion by FY28, a growth rate of around 17 to 22 odd percent CAGR growth rate, right? That's massive. It's just the food delivery business, huh? So yes, the quick commerce business is even larger. That is expected to touch a size of 2.3 to 4.2 trillion, basically by FY28 at a growth rate of a staggering 60 to 80%, right? So food delivery and quick commerce put together, and if you see the landscape in India currently, it's Zomato, Swiggy, and then Zepto. These are the only three players right now, with Zomato already being a listed entity, quoting at almost, my sense is 26 billion kind of market cap. And Swiggy is coming to you at around 11 and a half kind of market cap, 11 billion kind of market cap, right? Swiggy, in terms of numbers, is a little behind Zomato. My sense is they are almost 4 quarters behind Zomato on all verticals in terms of numbers and everything. But it still remains a very formidable play. Honestly, that's a long answer to your question, but my sense is it's a good long-term buy and a good strategic hold in your.
Alright, who is this IPO really for? Because if you look at the grey market premium, that has dropped substantially, and it is currently at just ₹8, which indicates that we may not see an outsized listing gain. So, who do you think should invest in this IPO?
Yeah, look, so if you're looking at it from a listing pop-up perspective, I don't think so. It just makes any sense. Honestly, the issue price at upper band is around 390 with a grey market premium of around 5 to 10 odd percent right now. Honestly, indicating a listing of around 430 odd rupees, give or take 5-10 rupees, right? So it's not a massive play, and if markets remains hugely volatile or negative, then you might not be surprised if the listing premium goes off. Basically, but my sense is this is an IPO with a 1 to 3 year kind of a call. The discount to Zomato is formidable right now. If you see price to sales, Zomato is quoting at almost 18 times. Swiggy is coming to at 7.8 times, right? So there is a good headroom catch up out there for strategic investors who are looking at food delivery and quick commerce business at one go, right? I think this is a great play to have in your portfolio. A full-fledged digital company, you have to also understand that Swiggy is the only player in the market with a unified app. Unified app, which is an app which has food delivery and quick commerce all in one, and even Dine Out is a part of that, right? So all others, let's say Zomato has Zomato and Blinkit, so the apps are different Basically, you have to go through two different apps, right? So fulfillment is that much more difficult in these apps. But Swiggy has a unified app, which to my mind, in a tech play, is a massive advantage over the competitors, right? So as I said, look, there is enough and more margin of safety available if you compare it with Zomato, which is the only listed entity available to us in India currently. So from a long-term perspective, which is 2, 3, 5 year kind of a call, I think it's a very good call. From a listing perspective, listing pop-up perspective, I'm really not sure. Suyesh, my sense it should still give you around 5 to 10% premium, but again, subject to market conditions.
Speaking of the rival Zomato, now that stock has delivered exceptional returns to investors over the past 12 to 15 months, but it has now corrected by about 15 to 20% from its peak. Assuming a hypothetical situation where an investor can only bet on one of these stocks, Zomato or Swiggy, which one would you choose to invest in?
That's a tough choice. Honestly, I think just given the valuation comfort we have, if you ask market leader, then obviously it has to be Zomato. But if you ask me valuation comfort and cushion, I have it more in Swiggy. Right. So my choice is more with the valuation comfort out there. I think the margin of safety is fairly large in Swiggy. I'll rather go with that.